Well, hello, everyone. My name is Alexis Rogers, and I'm the Customer Relationship Lead here at RightCapital. I hope everyone's having a wonderful start to your week so far, and welcome to our Creating Your First Plan webinar. The goal of this webinar today is to just provide you with a detailed overview on how to create your first financial plan in RightCapital. In addition to creating a plan today, we're also going to be highlighting how to align your RightCapital portal to you, as well as how to align your global assumptions as you begin to create and present your plans using RightCapital and all the different resources that you have while leveraging our tools, of course. So today we're going to be highlighting just some of those tips and tricks for aligning your advisor portal to you and ensuring that it's branded to how you want that experience to be. And if you are choosing to engage a client in this way, we're going to walk through the process of inviting a client and what that looks like. And of course, we're going to be walking through the 6 steps of data entry and creating that first plan, of course. We're also going to be highlighting all of the fantastic resources that you have available to you while leveraging our tool. One of those being that if you have any questions throughout the webinar, feel free to navigate to the GoToWebinar control panel and use that questions menu drop down and just input your questions there. More than happy to answer anything that you have towards the end of the presentation. And so shifting gears into RightCapital, when we first enter RightCapital, we're going to be brought to our advisor portal or advisor dashboard. But the first thing that we want to address when we log in and when we're setting up our profile to align it with us is going to be found in the gear icon in the upper right-hand corner and going into the account tab. Here under gear icon account is where we're going to find the profile section. And if you haven't already gotten the chance to do so, you want to make sure that you fill out this information, as this is what's going to display when we download PDF report cover pages. It's going to be stating our name, our phone number, and everything that's displayed here. So it's important to make sure that this is in line with how you want to represent yourself, of course. So if your phone number is not 555 like mine, you want to make sure you make that adjustment from here. Once we have that updated, we can navigate to the customization tab. Still under gear icon account, if we remain under customization, this is where we can brand the RightCapital portal to what you want to represent yourself. This is relevant for both PDF reports and also if you are leveraging RightCapital to present directly or just engaging clients directly in RightCapital, this will be the experience that we'll see. We can customize that from here. If we wanted to upload our own logo, we can do so by hovering over the logo option here. We can click on update, and this will allow for us to drag and drop the files directly here, or choose files from our computer, or select from one of these various sources to upload our logo from here. The next thing that we can adjust is going to be the color theme in RightCapital. This is going to be what we see when navigating throughout the modules. Right now, it's the white and beige default of RightCapital, which is why we're seeing here white and beige. But you do have the option to customize that. To do so, we can click on this field here, and you can either type out a hex code. So if you've got a press kit and they provided you with this hex code, which is what this random string of numbers and letters is representing, perfect, you can enter that here. But if you don't have a press kit, that's no worries. We can just click on the hashtag to the left, and this will open up a color wheel in which we can start to play around with what we want to see for our colors. So we can kind of fine tune what that looks like. As you can see, when we make this adjustment, the client preview down below also shifts. So this is just going to be a little bit of a preview of what it would look like if we chose to save this. We can do the same thing for that secondary color. So we can click on this hashtag, and once again, you can kind of play around with what's here, but you also have the option to select this color picker right here. This will allow for you to choose a color that's already on your screen. So if you did upload your own logo, for example, and you wanted to pull from there, let's say I wanted to pull from the RightCapital logo, love these blues, I can select that, and as you can see down below, this is a nice little preview of what that would look like. If you like what you have established as your color theme, you can just hit the save button, and that'll be used as your color theme going forward. Of course, you can always come back here and hit the reset button, and that'll reset it back to the defaults of the white and beige, and you can always customize it as needed. There is another layer where if we are using a color theme though, you do have the option of whether or not you want to include that color theme on PDF reports. You can control that dictation from this drop down here for color colors on PDF report cover page and indicate whether or not you want to not include those colors or if you do want to include those colors. So that's another customizability option from here. And as we start to shift gears a little bit, it is important to note that if you are engaging clients and choosing to invite them into RightCapital, probably the next question is, what would they be receiving in that invitation email? This is something that you can customize and tailor still within the customization tab, just a little bit further down. This is where you can customize the 2 different invitation email templates that clients can receive. There are 2 different templates. The first one is found here. This is going to be for when clients are not in that 6 steps of data entry that we're going to walk through. So if they have access to or if you have access to the full modules of RightCapital, they would receive this first email template. But if they are still in that 6 steps of data entry when you invite them, or if we're not hitting that complete button yet, we're seeing those isolated steps, they would receive this secondary email template. So you can customize this as needed, but this is going to make a little bit more sense when we walk through the data entry process in terms of the difference of the 6 steps of data entry versus not. But if we needed to update that template, you can do so in the gear icon account customization settings. Now that we have all of that aligned with how we want to represent ourselves, next up is going to be our integrations tab. Here under integrations, this is where you can set up some integrations to streamline a lot of that data entry process with some direct data feeds. Integrations are intended to reduce the time it takes to create and update client plans. You can do this via some of the different CRM partners that we have available, or if you have some asset custodians, like Fidelity, for example, you can set those up here. Under the integrations tab, you're going to see a long list of integration partners that we can scroll from to select. So if we wanted to set up Charles Schwab, we can select them from this list. But if we wanted to set up a different partner, we can always use this search option to quickly search up for RightCapital, for example. You'll notice that as we click on each of the different integration partners, on the right-hand side of the screen, we're going to see step-by-step written instructions on how to get that integration set up. So for RightCapital, for example, it's going to be guiding us to enter our RightCapital credentials and hitting the connect button to walk through that to get that set up for us. That's going to be relevant for all the different integrations. So it's going to be holding your hand through how to get that set up. But you will also see at the bottom of each of these pages a blue hyperlink. So for example, with the RightCapital one, we can click on this, and this will bring us to a Help Center article, which is going to detail out what the integration for RightCapital does. Once again, detailing out how to set up the integration and also how to use it. So when we do get it set up, if you wanted a refresher on how to leverage this, CRM, for example, you do have this option always. This is going to be found throughout each of the different integration partners. This is available even if we already set up the integration or if we are still in the process of setting up some integrations. You can always click on that nice link there for some additional insights on as to the functionality and the usage of each of the different integrations. So it's a great resource there in terms of getting that additional assistance on what those integrations can do for you. Moving on to our assumptions tab, this is going to be our next space to start to get your portal aligned with you. But this is an important space to set up what you want to run with for your global level assumptions for asset returns, inflation, and miscellaneous assumptions. This is going to be used for all clients as it's the global level standard. But there is another facet to these assumptions where right now we are setting that global level assumption, like I said, but you do have the option on the individual client basis to specify unique assumptions just for that individual client. The default is always global assumptions when you create a new client, but for each client, you do have that option to go in and toggle to customize assumptions for that individual client. So for example, if we have a client that's extremely nervous about inflation, and maybe we want to run with higher inflation for just that one client plan, you do have the option to indicate customize inflation for that one specific client within their own settings without needing to come back here into your advisor portal and changing it for all clients using global level assumptions. So a good rule of thumb is that when we're in our advisor portal and we're accessing this particular assumptions tab, you are changing the standard for global level assumptions, which would then make updates to any client that is still using global level assumptions. But to start to get this in line with how you want to represent yourself and run some of those calculations in RightCapital, the first thing that we can address is going to be our asset returns. For return assumptions, we have a couple different options for what we can utilize. The first one being the historical index returns. Historical index returns is going to be looking at the past 50 years of indice data where applicable. And you also have the option from this dropdown to utilize the forward-looking assumptions based off of JP Morgan's study. As you can see, when we toggle between each of these, the fields for capital gains, dividends, and interest are uneditable. That is because these two options are feeding over from those studies. They're pre-filled based off of those studies. Those are both reviewed and updated on an annual basis as new data comes out. So that is all streamlined there. If you wanted to enter your own customized returns and specify your own capital gains, dividends, and interest, that is when you would select the third option, and you have the option to utilize customized returns. Once we select that, we can then toggle and make modifications to these particular assumptions as desired. For us, we're going to use historical index returns though, so we're going to keep that toggled. You'll also find as another resource at the bottom of this screen some reference data to consider when you update your return assumptions. So if we click on this link, this is going to bring us to another article, and this is going to detail out each of those studies for historical index returns and JP Morgan's forward-looking assumptions. So if you wanted to see what is going on with those studies, what is baked into those, this is a great point of reference, even if you just wanted to take a look for the ones you're using or just have that as some reference data when updating your own assumptions. So some great resources there. That's always going to be linked at the bottom of those pages. Next up is going to be our inflation assumptions. So within RightCapital, you can set the global level assumption for general inflation, healthcare cost inflation, education cost inflation, Social Security cost of living adjustment, and tax inflation. Tax inflation is going to be referring to how much we're increasing the income dollar amount for each of the thresholds for income tax brackets. So it's just an important factor there. And then you also have the option to indicate if you would like for any of these below categories, ranging from goals to expenses, to be inflated in between now and when a goal starts. Next up is going to be our miscellaneous assumptions in RightCapital. Some of those miscellaneous assumptions are going to be referencing real estate property and the purchase and sell of real estate property. This is going to be looking at things like appraisal costs and closing costs that occur when we sell or purchase property and how that will impact those proceeds or costs. The third miscellaneous assumption is going to be how much we're reducing living expenses by when we have the passing of a client or co-client. This is particularly important if we have life insurance analysis and assuming that somebody passes away early. This is going to be that direct living expense adjustment. Once again, you can make this adjustment on the individual client level if needed. If we have a unique circumstance where it might be more or less aggressive than the general default right now, you do have that option. But when we're here, we're updating that global level standard. Now that we have all those assumptions in line, one of the key things with RightCapital that you're going to notice is that everything is customizable, especially when it comes to how you want to run projections in RightCapital. That rings true for how you want to run return model assumption calculations in the system, and that can be specified from these two drop downs here. The first thing that we can address is what you want to run with for return model types. So right now, what we have selected is the standard log normal model type, but you do have the option for legacy stochastic modeling. And then another key component of RightCapital is those Monte Carlo simulations and those calculations, just referring to those 1,000 trials of market volatility. And there are two main ideologies for how Monte Carlo can be calculated. The first one, the one that we have selected, is geometric, and the other main ideology is arithmetic. So you have both options to select from, depending on how you want to run those calculations. If you want additional insights as to what either of those are referencing, feel free to click on this Help Center article linked at the bottom. Unfortunately, they're just a little bit too nuanced to cover in a couple seconds, so feel free to take a deeper dive into any of those. But this is just here for if you have a strong preference for either option, you do have that customizability always with RightCapital. And now that we have all of that aligned, we can start to walk through that client engagement aspect. So if we click back into our clients list, we're going to show all of our clients, of course. And as you can see, we have a lot of existing clients. There's going to be two ways you can invite a client to RightCapital. The first one that's really important is that you can invite a client at any point in time in your relationship with them. Of course, if you are wanting to invite them. So for example, with the Allens, if we wanted to invite them, we're ready to engage them into RightCapital, we can choose to do so by clicking on the Client Access button. This will open up some fields in which we will see a field dedicated to the client and co-client for us to enter their emails and choose to invite them. But as we've been talking about, there's a lot of customizability in terms of leveraging RightCapital. That is true for how you want your clients to experience the system as well. So you can define here, number one, how you would like for your clients to interact with RightCapital. In the Client Access tab, there's going to be two main sections that the clients can manipulate. The first one being the Profile section. So here you can choose to allow for your clients to be able to update the profile, meaning that they can update things like their salary, their expenses, their goals, vacation goals, car purchase goals, or you can choose to have clients not be able to update that information and have them have a view-only experience. The next thing that you can indicate how you want your clients to interact with the system with is going to be how you want them to interact with the action items in RightCapital. This is referring to those action items where you can make your what if scenarios and propose what does it look like if I retire early, for example. So from here, you can indicate that you want your client to be able to save and change those action items. So they can save what does it look like if I retire early, and that will override what you might have had as your proposal. The middle option is that the client can try out those different action items, see the impacts of what does it look like if I retire early, but those will not be saved. So as soon as they log out of the system, it would revert back to whatever you had proposed and remain there. So this is a nice space for them to be able to try that out, but not save those changes. And then finally, of course, you can indicate that you want them to have a view-only experience and that you do not want them to be able to try out or even save those changes, of course. That's how you can set the assumption for how you want them to interact with RightCapital. But under the Planning Access tab, this is where you set the standard for what you want for them to view when they log into RightCapital. So you can check off all the different modules here. Let's say, for example, we want to just isolate just the profile section and really focus on building out those 6 steps and then just isolating those profile sections in the vault. You can do so and customize what's included and hit save. But when we are having a client engage in this way, as your relationship grows and maybe your conversations with the client grows, you can also, of course, always come back here to Planning Access and make changes to what is selected currently. So it's important to note that at any point in time in your relationship, you can come back into Planning Access or even Client Access and make changes to what they can and cannot view. So we can start to select more modules for them to view. If we've moved on in a relationship and we're ready to talk about our probability of success and some of those retirement projections, we can incorporate as much and as little as we want. You can always make changes as needed to reflect the changes that might be happening in your client relationships as well. So this is all items that you can adjust as your relationship grows. So you can always come back here to Client Access and Planning Access and make those adjustments. Now that we've walked through how to invite a client and what that looks like for an existing client, we can start to add a new client. So we're going to click on this Add a New Client button, and this will open up a field in which we would indicate the first name of the client, the last name, and you'll also see a field to enter the email address for the client as well. This really becomes relevant because you do have the option to invite a client to input information now. What this means is we're inviting the client straight off the bat. This would send them an invitation right now. But as we just reviewed, you can choose to invite a client at any point in time in your relationship with the client. So it's always an option in terms of when you want to engage them into RightCapital. But for this particular instance, we are just going to be inputting the client's information now and not inviting them. So we're going to click that option. When we do so, this is going to bring us to the 6 steps of data entry. This is going to be isolating and also holding our hand through creating that first plan or just creating any plan in RightCapital. It's going to be highlighting those major 6 things that we want to make sure we're entering, starting with number 1, the family profile. Also, who are we planning for? Under family profile, we're going to see a client and co-client pre-populated here. Let's click on the client card. We're going to see here the first and last name are indicated based off of what I just entered, but there are some important factors we want to make sure we're specifying from here, besides the name, of course. That is going to be their birth date, as it's going to default to January 1st, 1970. And also their planning horizon. The planning horizon is going to be the age at which we assume that they pass in the system. And then very importantly is specifying their state of residency. So if they're not living in Connecticut, it's important to note exactly where they're living, as this is going to control those state tax calculations. So with RightCapital, it has some very comprehensive tax calculations, and that includes those state taxes, but that is going to be controlled based off of what you indicate for state of residency here in the client card in the family section. We can hit save. And we can do the same for the co-client card. Of course, if there's no co-client, you can just hit the delete button and remove this particular entry. For us, we do have a co-client, so we're going to change their name from co-client to Pam. And we're also going to enter her birth date as well and change the planning horizon as needed. And we can hit save. We can also, of course, add additional participants to the plan, ranging from children to grandchildren to other family members. They do have a child, so we're going to add that child and change their birth date and hit save. Now that we've accounted for who we're planning for, we're going to click the next button. And this is going to take us to step 2, which is going to be covering the income sources for the plan. We're going to see a couple cards pre-populated here, some W-2 salary cards and Social Security cards for the client and co-client respectively. Let's start with the salary card for Jim. So let's click on this card. When we do so, we have the option to enter that annual dollar amount that he is receiving. You also can change the owner if needed. And you can also control when the income starts and the income ends. So especially if we have somebody that might be changing careers in a couple years or just shifting gears and they're going to start a new career path, you can fully control the start and stop time for these salaries and even layer them as needed. For us, we're going to assume that he's staying at this job until he retires though, so we're going to keep that selected and we're going to enter that annual increase as needed. And then if we have a circumstance in which this W-2 salary is excluded from Social Security tax, you do have the option to check that off here to indicate it. Also, a key thing as we're entering information in the system is you will notice that you do have the option to include notes for each of these data entry points. Within these notes, you can add a custom note, whether it be a record for yourself or an internal note, or if this is something that you wanted to paint some color for the client and just have a little bit more of an open line of communication with the client. So we can leave here maybe some key insights. Say, we know we are shifting careers in 5 years. We can revisit that. And this can be that note that's shared with the client. So it can be something that if we have them invited to RightCapital and they can view the income section, they could see this note if desired. And also if we download a PDF report, you have the option to include notes from there as well. So you always have that option. And you can also leave internal notes. So we can actually mark this as not shared with the client. So maybe you want to say, let's review this tomorrow to ensure accuracy. So this can be that internal note, but it's a great way to ensure that you're leaving those key points for yourself and also maybe important notes for the client as well. This is available for all the data entry points we're going over. So I'm just going to reference it now that you do have that option for some additional lines of communication there. But moving on to the secondary salary card for Pam. Once again, you can enter that annual dollar amount that she's receiving, but you also have the option to title this salary income card. So talking about that open line of communication and having those records, it might be useful to have this be detailed out, that this is a CPA salary. Once again, you can control that start and stop time as needed and any annual increase. Next up, that other important factor of our life for a lot of client plans is Social Security income. So if we click into the Social Security income card for Jim, there's going to be a couple important factors to enter from here. But if we have somebody that's already receiving Social Security, you're just going to want to click on this box to indicate that they're already receiving. You then enter that dollar amount that they're currently receiving and when they originally filed for Social Security. If they're not already receiving, like these clients are a little bit young, you can just deselect this. And then you have the option to indicate when you want to see the client file. So this can either be a specific age. You have the option to tie this to their retirement age, or if you want this to be their full retirement age or FRA. The FRA is going to be based off of their birth date that we just entered in step 1. So that's why it's important to make sure that's accurate. But for Jim, let's say we're going to do a specific age 70. And you can even specify whether you want this to be a calendar month or if you want it to just be the birth month, which for us we want to keep selected. The next thing you indicate when entering Social Security income is how we want to calculate Social Security benefits. So the default right now is to use simple benefits, use simple estimate from the estimated benefit amount dropdown. This option would utilize their active salary to project forward and backwards what their historical covered earnings look like to then project what their Social Security benefits are. You do have a couple different options for how you want to calculate Social Security benefits though. Some of those being, if you have the Social Security statement, that's a fantastic option to be a little bit more precise with the Social Security calculation. From this dropdown, we can select that we are looking at the Social Security statement value. From here, we'll see 2 fields populate where we can indicate the start age from statement. So whatever age we're looking at on the statement, if we're looking at age 62, we can select it from this dropdown. And then we'd indicate how much she would be receiving at age 62. So it's very important to make sure that the start age from statement is exactly in line with what you're looking at on the Social Security Administration statement, as the system is very comprehensive in its Social Security calculations as well. So if we indicate that we're looking at age 62 on the statement, and we're indicating that he's going to be filing as late as possible at age 70, the system will automatically be applying and calculating those delay filing credits as applicable, and if the situation was reversed, any early filing penalties as well. So this is going to be very comprehensive, but the important thing is that start age from statement is accurate. And then we're going to hit save. And we can do the same thing for Pam. So let's say we're going to keep her filing at full retirement age. We're going to keep that selected. But there are other options for how we want to calculate Social Security benefits. One of those being able to enter historical covered earnings for Social Security calculation. So you can enter here each of those years of covered earnings, especially if somebody might have been changing careers and changing income streams, hopefully throughout their lifetime and getting some increases. You can be a little bit more precise from this way as well. You do, of course, have the option to select no Social Security. When we select this, this would turn off Social Security benefits for this particular client, including their own retirement benefits and any spousal benefits as well. But for Pam, we're going to keep it simple. We're just going to use simple estimate and we're going to hit save. We can also account for other income sources as well. So if we click on add income, we can add additional salary. So especially if somebody is starting and stopping careers, you can add another W-2 salary card, but you can also add self-employment income. So that's why I've been specifying W-2 salary with these salary cards. If we've got somebody that's not receiving a W-2 salary and is self-employed, that's an important distinction, and you want to make sure you're adding this self-employment income card. You can also add pension income, annuity income, distributions from accounts, and under other, we can account for bonus income, child support, alimony, royalties, inheritances, reverse mortgages, new loans, and other income. This other income option is going to be the first of a couple different versatile tools we're going to be covering today. With the other income card, it's going to have similar data entry to what we've currently been entering in terms of just entering that annual dollar amount, setting who the owner is, when this income starts and stops. But the thing that makes this a versatile tool is that you can control the taxation. So default for taxes is earned income, but from this dropdown, you can actually specify that this is dividend income, interest, short-term or long-term capital gains, Social Security income, minister's housing allowance, tax-free income, or a tax credit. This Social Security option is typically what's used to model Social Security disability benefits. So if that's applicable, you can incorporate it from here as well. And once again, if you need to leave a note for yourself, you can always leave those notes, just indicate what this other income is intending to do as well. Now that we've got that covered, we can move on to step 3, which is going to cover savings. This section is going to be referring to savings contributions that are going towards accounts and those future savings. We're going to see a couple cards pre-populated here in terms of 2 401k cards and a taxable brokerage card, but let's start with the 401k entry for Jim. When we click on the 401k card, there's 2 main things we're going to be addressing here, which is going to be Jim's contribution or the client's contribution, and then the employer's matching. So the first field that we're going to change is going to be indicating how much or that percentage of the salary that Jim is contributing to the 401k. So if he's contributing 3%, we can indicate that here. You also have the option from this target dropdown to actually indicate an annual dollar amount for the contribution. So if they're making $20,000 contribution a year, we can specify that here. But you also have the option to indicate maximum contribution as well. This is going to be the maximum contribution allowable by the IRS. As you can see, the contribution will default to max if that's the case. So you can keep that selected if that is the path that they're pursuing. You can also control the start and stop time of these contributions. So for example, if we had somebody starting and stopping careers or having a shift in jobs, you can layer those 401k cards as needed as well. For us, we're going to keep starting and stopping at already started and assuming it's ending at his retirement. The next thing we'd be addressing is going to be the employer matching, which is controlled via the remaining portions of this data entry. So our primary match and primary match 2 fields, these are both tied together. This is going to be referring to if we have a dollar for dollar match up to say 6%. So if we have a circumstance where the employer is matching dollar for dollar, we would keep the primary match as 100%. And if they're matching dollar for dollar up to 6%, we then indicate primary match 2 as 6%. And then we'll hit save. And we can do the same thing for Pam's 401k contribution. So let's say that she's contributing only 5% of her salary. And maybe her employer is matching 50 cents to every dollar. So we can indicate that primary match is 50% and primary match 2 is 5%. But let's say that her employer is also matching a dollar amount irrespective of what she contributes. That is when we would leverage the flat dollar match field. So let's say that they are contributing $5,000 irrespective of what she contributes. That's where flat dollar match and flat percent match come into play. These 2 fields are going to be referring to that employer contribution irrespective of what the client contributes. And then you also have the option to indicate if a percentage of the match is going to a Roth account. If that is the case, and with the new Secure Act 2.0 changes that were rolled out, this is an option. And if the employer has already adapted to that and is allowing for that kind of contribution, you can make that specification here of the percent that is being matched to the Roth. And then of course, you also have the option to tick off if this is a self-employment 401k contribution. When we select this, it will be letting the system know to be looking for that self-employment income card entered in step 2. But since we only have W-2 salary cards entered, we're going to keep that deselected and let the system know we're looking for salary income. And then we're going to hit save. And we can also add some additional savings, of course. So we can add additional 401ks, especially as we talked about, if somebody's changing careers and their 401k elections would probably change as well. You can make that adjustment here. We can also add Roth 401k contributions, after-tax 401ks, traditional 403b and Roth 403b, 457b and Roth 457b, and also solo and Roth solo 401ks and traditional 401a contributions as well. You can also, of course, account for traditional IRA savings, SEP IRA and simple IRA savings, and Roth IRA savings, factor Roth IRA contributions, Roth SEP IRA and Roth simple IRA, and of course, HSA contributions, 529 savings, taxable brokerage savings, and under other, we can of course capture some other savings such as cash balance pensions, deferred compensation, profit sharing, employee stock purchase plans, employee stock ownership plans, bank savings, tax deferred savings, and tax-free savings. This tax deferred option is going to be one of those other versatile tools, but this is typically what is utilized to model lump sum pensions. So if we have that circumstance in which we have a lump sum pension, let's say Pam has a lump sum pension, we'd want to title this card so that we know. We'd indicate the contribution or how much it would be, set the owner, have it start and stop in the same year to illustrate that one-time lump sum, and then indicate where this would be going towards, whether it's the 401k or IRA buckets. And that's how we can model that common situation of a lump sum pension option, and we can hit save. Next is going to be the net worth for the clients. This is going to be looking to capture the current net worth and their current assets and liabilities. We can start to add those accounts by clicking on Add Account, and from this dropdown we can add bank accounts, credit cards, investment accounts, stock plans, loans, additional properties such as investment properties, vacation home, and land. We can also add a plethora of insurance options ranging from life insurance policies, disability insurance policies, long-term care insurance policies, and auto and umbrella insurance policies. We can also add other assets as well. Other is going to be looking to capture other lifestyle assets, which is typically things like boats or cars, fine art, or jewelry. But this other section is also where you can capture notes receivable that a client might have, and also businesses. So if somebody is an owner of an LLC, for example, you'd be using the other option to indicate that they're a business owner and indicate those parameters. But for the helpers, they do have a bank account. Let's click on Add Account Bank, and then we can start to enter the parameters for the bank account. We can title this bank account. So this is the joint checking. So that way we know exactly what this is referring to when looking at the balance sheet. We can indicate that current balance, and then indicate who the owner is, whether it's jointly owned by the client or co-client, or if it's owned by a trust. In this case, it's jointly owned, so we're going to select that and hit save. And as we hit save, you're going to see that the net worth automatically updates to that $75,000. There is another data entry point for each of these accounts we're going to be going over, which is the included in plan option. This included in plan option, when we have yes selected, just means that we are, of course, including this particular account in future projections in the current net worth and across the entire plan. But you do have the option from this drop down to indicate that this is not going to be included in the plan. So when we select no, this will exclude this account's balance from future projections and in the net worth. So we'll see that the net worth dropped down to 0, and we now have this as excluded from the net worth. The third option from the included in plan drop down is to select balance sheet only. When we select this and hit save, we will see this account included in current net worth or current balance sheet reporting. So we'll see this right now as part of their net worth. But when you look at future projections, such as the cash flows and property success, this particular account will not be included in those as something to be tapped into. So if this is something we want to only account for in current net worth statements, but not be accessible in future projections, that is when we would select things like balance sheet only. For the helper, so we are going to be including this in everything, so we're just going to hit yes and hit save. They also have a credit card, so let's click on Add Account Card. We can title this, enter the total balance of current debt, and you can indicate that monthly payment that they're making, the APR, and the minimum payment. We can also once again select the owner and hit save. We also have some additional investment accounts we're going to be accounting for. So we're going to click on Add Account Investment. They do have a brokerage account, so we're going to account for that first. Let's title this for our ease as joint brokerage. It is a taxable brokerage account, so we're going to keep the account type selected, and we're going to enter that total balance. Of course, the taxable brokerage account, we want to make sure we're specifying that cost basis for tax calculations. And let's make sure we're specifying that owner, whether it's jointly owned by the client or co-client, or owned by a trust. And then we can hit save. But it is important that if we're entering the total balance as we are, to specify the asset allocation. So if we click on where it says customized, this will open up a screen in which we can customize the asset allocation for this account. The default for a new account is 100% other. If that's the case, then you don't need to make any modifications. But if you need to make adjustments, you just want to make sure you are coming into here. And we can manually assign how much of this portfolio is in each of these different asset classes. Of course, making sure that we are totaling up to 100%, and we can hit save. And now we're using that as the asset allocation for this particular account. They also have some 401k, so we're going to start to add those by clicking on Add Account, Investment. This is going to be Jim's 401k. Since it's not a taxable account, we're going to click on the account type dropdown. As you can see, there's no shortages of options that you can add, but we're going to click on 401k, and we're going to enter that total balance again. But as we talked about, it's important to specify the asset allocation. So let's click on Customized. And as we just reviewed, you can manually enter how much of the portfolio is falling into each of these asset classes. But if we click on Customized again, you do have the option to utilize model portfolios for this asset allocation. Once we select that, we can then select which model portfolio you want to leverage as this target allocation for this account. So if this is the growth portfolio that we're invested in currently, we can select that from this list and hit save. When we do so, we'll see that the asset allocation is now based on the model portfolio. We also have Pam's 401k, so let's click on Add Account Investment. Let's title this Pam's 401k. Let's switch the account type to 401k and make sure we're adjusting the owner to Pam. But let's say we actually have the statement. We know exactly what Pam is invested in for ticker symbols and for holdings. We actually can enter, instead of total balance for the entry method, we can enter holdings/asset class. So when you select that option, this will open up the fields in which we can start to add holdings or add asset classes. So let's start to add some holdings. So when you click on that button, we can then enter those ticker symbols, enter the quantity that they own, and we can continue to build out the portfolio. So let's click on Add Holding. And you can just continue to build it from here. But as we know, there can be sometimes where a client might have some cash that's not yet invested in an account, or maybe there is a holding that is not publicly traded and has a ticker symbol. That is when we would click on Add Asset Class, and you can indicate exactly which asset class it falls into. So if they're invested in US equities, we can then enter that total balance that is in US equities, hit save. And let's say that they also have cash that's not yet invested. So we're going to click on Add Asset Class, Cash, select cash again. And let's say there's a lot that's not yet invested, and hit save. And that's how you can start to enter those ticker symbols and asset classes as well. As we do so, the asset allocation is going to be defaulted to be based on the holdings and asset classes that we just entered. You do have the option to click on this, and it'll show you the exact split and the allocation for this account, but you do still have the option to override the asset allocation. So even though we just enter those ticker symbols and asset classes, you can choose to use a different asset allocation, whether it be a model portfolio or customized. This is relevant for if we have a circumstance in which maybe you have them reinvesting into a specific portfolio. Maybe it's going to be happening tomorrow or in 2 days, and it's just not yet fully processed, but you want to ensure that the current net worth is accurate. That's probably when you might be overriding the asset allocation, as we just indicated. So it's always an option to make that adjustment as needed for the circumstance. Now that we've accounted for their investments, they do have their property that they own. So we're going to click on the property section here, and we're going to start to enter the parameters for the only thing that is automatically included in their net worth, which is a primary home, of course. The primary home entry, there's going to be 2 options. We can either indicate that they're renting a home. If they're renting, we can indicate that monthly rent that they're paying, the annual renter's insurance. But if they own a home, we would just select Own, set who the owner is, whether it's owned by the client, co-client, jointly owned, or owned by a trust. Indicate that original purchase price, the current value, the annual appreciation percentage, annual property tax, annual insurance, and annual maintenance and annual tax increase as well. We can then hit save. But let's say they also have a mortgage that they still have outstanding for this property. We can add that by clicking on Add Account, Loan. We can change the owner to jointly owned. From the loan type dropdown, the default is mortgage, but as we know, there's a lot of different mortgages out there. You can select which one might be relevant for this client, or if there's actually a car loan, a student loan, or just other loan in general. For us, it's just going to be standard mortgage. We're going to keep that selected. We can indicate that original amount that was taken out, when they took out the mortgage, the interest rate, the loan term, the current monthly payments, and of course the current balance for the mortgage as well. You do have the option to link this to a specific property. The default is the primary home, but especially if we have multiple rental properties or vacation homes, you can tie that to the specific property as needed, especially if we sell those and need to pay off a mortgage that's outstanding. So let's hit save. And now that we've accounted for their current net worth, let's move on to the next step for expenses. Here in expenses, this is where we're going to start to enter, for somebody that's not yet retired, a lot of those current expenses. If we click on the living expense card, this is where we can enter the living expenses for a pre-retiree. These monthly living expenses, it is important to note that anything that we just entered in the net worth section, such as those credit card payments, those mortgage payments, annual property tax or annual insurance, anything like that, we've already entered in the net worth and it's accurately captured in the net worth. It'll show those payoffs, those tax deductibility aspects to mortgages, things like that, all captured based off that net worth entry. These living expenses we're entering now in this particular card is going to be referring to any expenses on top of those. This is going to be things like paying for gas for our cars, going out to eat, going to see movies, utilities, and those other fixed expenses that we expect in life. So for this client, that's going to be $3,000 a month, and we're going to hit save. We can then adjust the taxes and fees card. So you do have the option to indicate the filing status for these clients. Right now, they're married filing jointly, but you can specify that they're married filing separately or that they're not married and that they're filing single. You also have the option to indicate if there's any applicable local tax for this client. This is going to be typically things like local municipal taxes. So New York City, for example, can have that municipal tax fee fall to a certain threshold. You can specify that here. It is important to note that state taxes are going to be separately calculated on a separate line expense. This local tax is exactly what the name entails, a local specific tax. This is also where you can indicate the average AUM fees that might be applicable for this client's portfolio. We also have the option to add additional expenses, of course, so we can add medical expenses. This is going to be referring to, of course, medical expenses, but also can be used to model current healthcare premiums for somebody that's still working. We can also add alimony, extra debt payment. So if we're trying to make a one-time lump sum payment or just a short-term recurring payment towards an existing debt, or we can add an other expense. This other expense entry is going to be our other versatile tool that we're going to be referring to today. Within this entry, we can add that monthly expense, indicate when it starts and stops. But what makes this versatile is going to be the tax deductibility of this expense. The default is just a standard expense, of course, but you do have the option to indicate that this is actually a miscellaneous itemized deduction, a W-2 deduction, self-employed healthcare premium, or an above the line deduction. But that's not the case, so we're going to hit delete. And we're going to move on to step 6, which is going to be covering the goals for the client. This is all the fun stuff that we're planning for, starting with retirement to our college goals. So we're going to see all those cards pre-populated here, but starting with the retirement age card, this is of course where you can specify when the clients are planning on retirement. So here we can indicate that Jim is planning on retiring at age 70. Pam is going to be retiring at age 67. And you can even go so far as to specify a calendar month for retirement. So especially if we need to prorate the income for any reason, due to their career path, you can select that specific month from this dropdown and we'll show that prorated amount. For them, it's gonna be a little bit more simple, so we're gonna keep that deselected and hit save. And next up is gonna be your retirement living expenses. So similar mindset to those pre-retirement living expenses in that anything we enter in the net worth is accurately captured there, ranging from those mortgage payments, those credit card payments, insurance premiums, or property tax, all separate line expenses from those entries. So this is going to be those expenses on top of that. For them, it's going to be $10,000 a month. And we're going to hit save. Next up, for one of those biggest costs in our retirement phase, is our annual retirement healthcare costs. From this card, you have the ability to specify and control when this cost starts, whether it be their retirement age or specific age or life event. Once we indicate when we want this cost to start, you can then indicate what you would like to see for the cost estimate. Right now, using the national average, but you do have the option to enter a customized dollar amount. So if we know that they're going to be spending $2,000 a year with this particular goal, we can specify that here. Otherwise, you have the option for a detailed estimate from this dropdown. The detailed estimate would be what we would select if we wanted to turn on Medicare premium calculations. When we select detailed estimate, there will be 4 fields that will populate. The first field is going to be referring to pre-Medicare costs. So this is going to be if we have this cost occurring prior to age 65 for the client. Let's say, for example, we indicate that this cost starts at age 60. Until the client turns 65, we'd be using these pre-Medicare costs for their cost. Once they turn 65, though, the system would then automatically turn on Medicare premiums Part B and D based off of their AGI. This is going to be looking at, of course, that 2-year look back that's applicable. But you do have the option for Medicare Part D to indicate that they're actually not going to be enrolled. So if they're not enrolled in Part D and that's not applicable to them, you can specify that. And then we'd only show Medicare Part B calculated based off of AGI each year. The fourth and final field is going to be referring to out-of-pocket costs. This is going to be any additional coverage on top of those Medicare premiums post age 65. So if we've got dental or vision coverage outside of Medicare Part B and D, you can specify the out-of-pocket cost from here as well. And then we can hit save, and we can address our retirement long-term care cost. So continuing the conversation on our healthcare costs is our long-term care cost card. With this card, we can indicate how long we would expect the long-term care event to be for, or how long we want to plan for it. So right now we're using the last 2 years of plan, but from this drop-down, we can indicate a range from last year of their plan to the last 10 years of their plan until they pass away at age 95, or even no long-term care for trying to turn off the long-term care event altogether. Once we address how long this would be occurring for, we can then address how we would like to be showing the cost estimate. So we have a couple national averages that we can leverage, ranging from in-home care national average, assisted living national average, to nursing home national average. You do have the option to enter a customized amount though. So if you know that they've been to a specific facility that have a specific path, you can enter how much that cost would be in today's dollars, and we'd show that inflated at the time of this goal occurring. We can then hit save. And since we added a child, we do have a college goal that's pre-populated here. So if we are doing college planning, we can start to manipulate some of these parameters. For example, the cost of college can be adjusted from here. Right now we're using the national average. You have a couple different national averages to select from for all the different types of universities or schools. But you can also enter a customized amount for that cost or look up a specific college. So we know or kind of hope for them to go to a specific college, we can use this college lookup to type out where we would expect for them to go, which of course is going to be Harvard. We can select that from the list, hit save, and we will now see the college goal as that hefty cost of Harvard. We can also account for additional costs and goals as well, such as this education goals, if we have additional one that's coming in, such as pre-college goals or college goals. If we are trying to illustrate car purchases, vacations, weddings, property goals such as primary home relocations, investment property purchases, vacation home acquirements, land, or even home improvement goals. We can also illustrate other lifestyle asset purchases or business purchases as well, gifts such as personal gifts and charitable giving goals, legacy goals, and just other goals in general. Let's say that the helpers are going to be following that common scenario though, and they're going to be downsizing when they retire. That's when we would select property, primary home relocation. Within this card, we indicate how much they're purchasing the new home for. You can also indicate how they're acquiring this new home, whether actually inheriting a home, purchasing a new home, renting out a home, or moving into an existing property. For them, they're buying one, so we're going to keep that selected. And then very importantly, you want to specify the state location, as this is going to be controlling that state taxes. So when we have this goal occur, we're going to show that shift into the Washington state taxes or lack thereof. We then indicate when this goal would occur. So it's Jim's retirement. And then we'd indicate similar parameters to that original entry. So just annual insurance, maintenance and taxes, appreciation and tax increase percentages. But when we have a new asset coming in, you can also specify how we're going to be paying for this. So if we're going to be paying for this full cost up front at the time of this goal occurring, we can keep the down payment to 100%. But if we're actually financing this purchase, we would change this percentage to whatever the down payment will be, the term, the interest rate, and then you also have the option to indicate what's happening with the existing primary home. You can indicate if they're actually converting the primary home into a vacation home or a rental home to get some of the additional income, or if they're going to be selling the primary home. In this case, they're selling it, so we're going to keep that selected and hit save. Now that we've entered all of that information, let's hit the complete button. When we hit the complete button, this is where we're going to see all the modules of RightCapital, and that's going to unlock all those different modules. It is important to note when you first enter a client plan, it's probably going to bring you to the dashboard section. If you needed to make modifications to any of the data entry that we just did, that was simply the profile section. And that 6 steps of data entry was just highlighting and isolating these 6 important steps of profile to walk us through creating those key points for the current plan. You will notice that under profile, though, there is more than 6 entries here. You also have a blueprint option now. With profile blueprint, this is going to be a key visualization of everything that we just entered in a nice, easy to digest format. We're going to show here that net worth, who owns what. We'll show that goals across their lifetime with their college goal coming up soon. Them moving when they retire. And also their income, savings, and expenses. So it's going to be a nice interactive space to summarize everything that we just entered. But that is essentially how we can start to create that first plan and also leverage the blueprint module to summarize it in a nice, easy to digest format. It is important to note, though, that when leveraging RightCapital as a resource, there is a lot of different resources available. And that includes, if we go back to our advisor portal, this help button in the upper right-hand corner. This help button is just going to bring us to our help center, where you're going to find a lot of really helpful articles that go over the data entry process. You'll find here things that go over the different modules and what they can do and that different functionality. But this is also where you can find a lot of training videos and also webinars. So you can sign up here for some of those upcoming webinars, but you can also watch all of our recorded webinars as well. So especially if you wanted to take a deeper dive into education planning, for example, you can watch the recording for that particular situation. You can walk through pension payouts if that's something that's applicable, or even client settings. So there's a lot of different content that you can watch here as a resource. On top of having those articles and those videos walkthroughs, you also can get live assistance. That's going to be found under Contact Us Support. This is just going to list out the ways you can reach out to our fantastic support team. The first and the most prevalent way you can reach out to support is going to be via this chat bubble in the right-hand corner. With this chat bubble, this will be a space where you can directly contact the team live for assistance, but you can also call the helpline for assistance as well. You can email, or you can even book a dedicated one-on-one session for a case review, or if you have a list of questions or just want that second set of eyes on something. This is a great resource that you have available to you.